Yeah. Yeah, so one is interesting about share. Basically, guys, we'll be sharing um, the thing. So how we do the thing. So basically, I'm gonna go back to the chart of what do you call this yeah, any chart basically. So guys, the process here of how we use this kind of like how I analyze the market. So that's what I want to stop to see any analysis that I can look to. I want to talk about this genuine 30 that I could every token. You can see the analysis are there, guys. So basically what you want to do all the time, make sure that the analysis are there, I think. So how do I approach the market? That's a question that I want to like kind of answer for nowadays. Yeah? So how do I, we can see we have all these things here. I'm gonna be there to tell all like how the things work, all the stuff. But let's just go to gold, guys. The most simplest one. I have analysis on gold. So I'm gonna put the analysis here and all those things are there. You see on gold, it's already analyzed and analyzed all the stuff. I already traded this trade, guys. So let's jump into the things, how they are started now. So how do I analyze the market, guys? Let me just try to open another chart for gold so that we can analyze. So I don't want to mess up this analysis because it takes time to do these things. So let's put plus Shao USD. So this is Shao USD. So Shao USD. I'm gonna go to okay, all of them is still fine. Shao USD. We're gonna Shao USD. What's happening? Okay, I think it's written capital.com. Let's try this one. Oh. So we're gonna go here to this gold here, guys. You can see Shao USD gold here. So guys, what's happening on gold, guys? Basically, how I trade the market. So I'm gonna approach the market in a different way these days, guys. Basically on the market maker perspective and understand. So basically, what I'm looking towards the market, just simple things, guys. I'm gonna have a market pushing upwards like this, going upwards and break a structure. Understand? Then on this structure, guys, I'll have to mark the highest point of the breakout here on the correctional zone and the lowest point of the breakout of the correctional zone, of which this level there, I'm understanding that if market was going up, the market maker corrected here, trapped the retail traders. So I want to see retail traders getting trapped. So the loss that's from the point whereby like if the retail traders and okay, if the market is not creating, like if there is no liquidity that you can see, you are the liquidity. So basically that's what I'm trying to emphasize, guys. Like if there's no liquidity that you can see on the market, you are certainly what you call what a liquidity. So basically what you're trying to emphasize that you have to spot the liquidity so that you can be aware where the direction goes. So basically, how does we trade? So guys, the best way I trade is that just simple way of trading. We're gonna have this set up here. So this one, we're gonna make it an LL, which is liquidity. You can call it anything that you wanna call it, but I put it an LL, liquidity sign, and this point here is another liquidity sign. Understand? Which means the market trap the retail traders on this zone. So you can put a what do you call this thing? Retail problem set up like this to the downside, you understand? So usually market what it does when it comes to this zone. So basically the market is going to come back here. If it comes to back and retest this zone, it must come back and retest this zone and continue. So this okay guys, we're going to have another zone here. Look at this. So that's a liquidity zone, but we're going to have another zone here. Sometimes when market breaks out, if they break this zone, the middle point of the previous low, there can be many lows like previous low that break out the previous high, you know. Like this one was a lower low than this one to this one and this one. So basically that's what you're looking towards on that thing. So basically the market came back here to retest this zone, understand? So what I'm waiting, if the market maybe the market is in a downtrend overall structure. So what you're gonna do is to wait for the market to punch below this price and retest there and continue to sell. Maybe there or even pass. Sometimes they just come back here, retest and continue to sell. So instead of a structure that I used to trade more, I'm trading most of the day. So basically here it becomes my dollar sign entry. What do you call this dollar sign entry? So this line here, guys, I put the dollar sign entry on this line because this is where I wanna enter my entries. I always enter my entry on the dollar sign entry, whether I'm buying or not. So basically, that's what I always do. basically just to gain consistency on the market. So basically, you need to spot these two things, then you are done on the market, guys. Then just have patience to wait for proper entries. So let's come and see how this thing happened on the forex trading. Let's come. So that's what this thing, vice versa, even the buy side, guys. When the market is pushing to the downside, you want to wait for the market to come back, collect. Let's have this thing here. Remove. Market push to the downside, correct, like this, and come back here. You see. So if you see something like this, you're gonna put your entry point here. Mark your liquidity zones, break that structure, then you mark your liquidity zones here. That's the liquidity zone number 1 and liquidity zone number 2 on top. Understand? Just make them here LL. Just make them here LL. Then you're gonna mark this point here. This point here, I think it's the yeah, this point here, this is your golden ratio zone. So you're gonna put this thing, yeah. If market comes back and retests that zone, so on a come back, sometimes it retests here, come back, goes above, they close above the price, we jump in to continue to buy. So that's what I usually do to collect the liquidity. Your TP is here on the liquidity, guys. If market comes push something, you just need to wait and all those stuff. Understand? Yeah. But most of the time, so let's check into market when we saw this thing happening straightforward in the market. You understand? You understand? Yeah. Let me remove this thing here. I don't know what is it doing. Yeah. So yeah, let's come back and remove all the stuff, guys. I wanted to do those things there, vice versa. So basically, let's come into gold. Basically, on the beautiful gold that we had in the past, what you needed to do was only one thing, guys. So on this trade here, I'm gonna talk about this one only, guys. I'm gonna just check about. You can also backtest on your own all the stuff you see. So basically, the strategy that I'm using now is to correct market comes back here, make a W pattern. You see, I was waiting for that thing to happen. Then what I do, I mark my zones. See, if you wanted to kill, that's when I called the trade. I did send the trade on the what do you call this thing? On my group chat there, guys. I did send the trade on the group chat when I was trading gold. So what you want to do, you mark the previous low, which is the liquidity zone. Understand? You mark this level point, which is our dollar sign zone. You see, of which market did come back and retest on that zone. So you're just waiting for the market to what to kind of contribute the zone. Then you mark what the highest point of the zone, which is the liquidity zone also. You see. So basically, you are done. You want to mark your LL. That's your LL here. Liquidity zone below, point liquidity zone above of the zone, which is your target zone. So what you're gonna do when you take a trade. So basically, this is what you needed to do, guys, when you were trading on this zone here. So basically, your zone were here on preferred structure. That's on your LL, all of the stuff. So market went below the zone here to come back and collect liquidity. What we instructions that market pushed here, trap the retail traders come back to collect liquidity. Now it's coming back to collect liquidity above. Obviously, it might continue to the upside. So every time before you trade, guys, you need to check this thing first, then you know where the direction is gonna go. So basically, when market comes back inside here, you know that you're gonna buy only. You're not gonna look for any sales unless the market breaks it above, because market is targeting what that liquidity above them. So if you caught an entry here, let's go for the purpose here. So guys, sometimes when the market reaches here, it does not just continue to buy by sprint, guys. You need to have what you call what another possible, and you can't just buy here or whatever. So you may drop the time frame to the lower time frame. So you understand? I want to show you something. So you drop to the lower time frame zone just to understand the concept what the market is doing. So you can see that okay, if you check on this zone, we do see that the market is trending. There was a smaller trend. You know you are looking for buyers inside that zone. You understand? So you're gonna wait for the market to trap people. You understand? You mark the same thing below liquidity. So you see, guys, we have watch what the market did, guys. We have market breaking out here. It went above, preferred low, great, close above, and never came back to close. So basically, we had our zone sort of here, our golden zone ratio entry. So guys, I'm telling you these things, guys. It's a banger. Golden ratio zone entry on so guys, this is what we call golden ratio zone entry here. Check that. So what you do on this zone, you're gonna put it a dollar sign enter there because market came back to retest on this zone, come back here, trap the retail traders. So here we had our LL liquidity zone align. small one. So you just do the same thing over and over again. So yeah, LL zone here, down here, the LL here, understand? This is our zone LL. Then we had our zone on top of the zone there. So you see, what I told you guys most of the time. So you see what I told you. So if you took your entry here for gold, wait for the market to go above to break above the trace retracement, you already know that you were tricking buyer. So you're just waiting for the confirmation for a better entry. You could have killed the drop to trade with 1:7 risk one ratio entry, banker with the banker trade. So guys, that's how you trade. I'm looking towards to this type of trades now. That's the trade that I took most of the time. That's why I'm always looking the same thing over and over again, just for consistency. So basically, what I'm telling you guys, if you are looking for, must know that was a bigger time frame perspective. You go to the 1 hour, you check your directional losses. When the market comes back inside here, market is gonna respect. You can drop the market to the lower time frame. You cannot just come here. Like the mistake that most people we do, guys, is to. So basically, if you choose to use the higher time frame zone, let's go to I say okay, put this thing here. 4H. Yeah. I say you choose to use the high time frame zone like we did here. If you choose to use the high time frame zone or the 1H, let's say like 1H, ne? You choose to use the high time frame zone. Ne? If you choose to use the time frame, you must make sure that your stop loss must be at least below this liquidity zone. You see. So if you wanna hold, like you can reduce the stop loss, make sure that the stop loss was below the liquidity zone, you target the new high. You understand? Hopefully you understand on that topic point. So that you could have minimized the losses and go to the lower time frame and understand, but you could have solved this thing that the market is doing this thing. So here comes the thing, guys. You know that you're looking for buyers, guys. That's a directional purposes. When market, this is a higher time frame perspective, guys. You go to the lower time frame, you start to look for those smaller entries that are better for yourself. So let's continue to see what's going on, guys. You could have bought here, looking at all the stuff, guys. On the long time frame, they are looking for those better things, guys. So if market breaks out the liquidity zone, it can also retest on it. You understand? Retest on it and give you an impossible entry. So that's what the market did here. So let's say sometimes now you're looking for this trade. I'm going to talk about gold again, guys. You have a beautiful upper trend here. I'm going to show you something. So I'm going to analyze gold only, guys, just to give you proper entries and structures and how to get those type of interest rates. So market went above here, give other stuff. Okay, we're going to focus on here, liquidity zone. So guys, the market must break out from a trend to come back inside. That's only thing. Breakout done. You must see liquidity being trapped, then you can jump in. So we're going to drop I'm going to show you something, guys, on gold, how powerful this strategy is. So let's come back here. I'm going to drop this just like 15 minutes time frame. So this is our trend line on the high time frame. You can, for bias direction, you're looking for bias because the market is in an upper trend unless it breaks the trend. So what you're going to do, guys, as your trader, you understand that I'm going to have, look at this, beautiful, beautiful, beautiful. You mark the below setup here. The end thing that most people you need to know to have is like patience. Patience is the name of the game. Above the setup, which is what our entry zone. I want to show you something, guys. This is so remarkable and very powerful. So I'm gonna have a horizontal line there, put a horizontal line there. You see, which is what our LL zone here, understand? But now you need to understand inside here, we had a level point that was also retested. So market when it goes below the target, you know where your target is. So basically you could have killed this entry, very powerful. Same way you will understand this trade here, then you put your dollar sign zone here. So you want to put the dollar sign zone here, dollar sign zone here, you have an LL zone and target. So everything is like is like very, very what do you call this thing? Very analyzed, very analyzed and understood. You understand basically because you know what you're doing. So basically, you saw that the market closed above the liquidity zone here. Most likely, you mark the bodies by the line, guys. The body of the price. You understand? So you killed here. You wanted to mark the body of the line also here. So you see what the market closed above. You're just waiting for the market to close above. So basically, on the 15 minutes time frame, you try to see maybe you saw there is a rejection on the resistance, but you know that they're looking for buyers. So you even in the lower time frame, you can see that the market went above, corrected, come back, trap on the people. They always do the same thing over and over again, guys. So you could have entered there for more confirmation, all the stuff. But now look at this. Kill the entry, you're done. Above the resistance, you see. That's where the market kills. Then you kill the above that one, or you can go above this below bodies of the candle here. As you see here, below those bodies, you can go, then you go stop loss above the liquidity zone. Somewhere here, I traded this trade, guys. I killed it. That was a banger trade that I took. Like later on, I killed the trade, guys. This is the trade that I took last week. I'm gonna show you. I did send the trade also on the you can check it on my group chat. It was there. Understand? There was 1:3 the squad ratio, guys. I killed it. Better trade ever. So for the news, like it was simple, guys. If market goes above the liquidity zone, if you remember the direction that I drawn before, if market goes, so market can go above here and goes in print another pattern. Understand? You can see what was happening here, guys. This was the liquidity zone, LL. So you mark this price here, it was an LL zone. You come back here, LL liquidity zone. You understand? You can mark it as a zone. So what the market goes to the liquidity zone here, you don't buy, you don't sell anything here. You understand? You might wait for the market to print another type of entry zone. So what we're going to do here, if you wanted to kill the market on this zone, look at, watch this. You are supposed to drop the time frame at least to 5 minutes, né? So that you can see the whole structure of the market on that particular. So if market reaches a liquidity zone, you don't want to take any entry there because it's a liquidity zone. There is about to trap people. Understand? They will never just going to move without trapping people in that zone. Always understand that concept. So what we have to do now is to come back. We are looking for buyers. We know that, okay, there's a chance for the buyers, but we need to confirm them, understand, based on the strategy. So you're going to drop the time frame at least 5 minutes. Then what you're going to do, you understand, okay, I had this pattern. You see, you know what you're looking for. You're in an uptrend most of the time, more confirmation, you understand. So it gives you that confidence to take the trade. So you need to check a lot of things. So this was a downtrend, more sort of. So you see that market corrected, pushes up upwards, and give it this correctional zone here. Trapping retail traders, give them false hope that they must buy all those stuff. You want to see people getting trapped. That's point number one, gents. You always want to see people getting what? Trapped. So let's go. I want to show you something. So basically, that's a powerful thing. Then you see a market crumple. Then after that, you're going to mark the zone. Liquidity zone number one here. You see, I want to show you something very powerful. So I'm going to put this liquidity zone here. That's what I do daily basis, guys. I don't think I'm going to change the strategy again. I'm so comfortable with the strategy, guys. So it's just giving me what I want in the market. So I'm going to follow it most of the time. So that's a liquidity zone above. You see, when the market reaches a liquidity zone, it always traps people. That's why you see the market also here starting to hold for a longer period of time to trap people. So you don't want to enter your trades here. You want to be in pain most of the time. You understand? You understand? So yeah. So this is a liquidity zone on top, liquidity zone below. You understand? I don't want to make this thing longer, but yeah. So liquidity zone above. Then you must wait for see where the market did trap people as well. So basically, you check out here, market went above, created a high, got above, created a high. This high, it was very important to the market, but it's too near to the liquidity zone. But okay, sharp. If you see market come back and retest here, this was the last time we saw too much bias in the market. You can see the last time. So market here went above. If you can analyze high, lower, low. This is the last time we saw too much buyers in the market. The buyers tried here, they failed. But this is the last time we saw too much buyers, which can also give a confirmation that the buyers, they are certain, but if they continue to buy, they might buy too much again. So what you want to see is the market coming back and retest on that zone. You understand? Retest on that zone and give it a beautiful support on that zone. So I could have taken my entries here, chance, here with what do you call this, the line point, so that you catch some sniper entries. So what you're gonna do here is put the line here and you're gonna go SS net. So after that, you're gonna mark that lower point here on the body, like always mark the body's line there. So that zone is very important. You're gonna put this thing here somewhere there. So you see market went above here. Suddenly was able to close above the zone. It was failing to close above that line. So market was starting to close above that zone. When you saw that thing, then you understood that this was what a liquidity zone below it. So this was what a liquidity zone, LL. So the stop loss can be stop loss. See the way that the market is gonna reject the liquidity zone. So liquidity zone was rejected. Market rejected the liquidity zone. Then what you did, maybe after the market break again above, then you cannot took an entry. Whatever you took an entry, my stop loss maybe could have taken this entry here, put stop loss below the liquidity zone, and understand that the market is targeting the liquidity above here. So put the LL here and you check the liquidity zone. So if you knew that they were news, so basically, if you now start to understand what was going on, this zone here, it was a liquidity zone, market went above, did the same thing. So basically, you understand what's going on against. So you're looking for buyers, but you want a perfect entry. You understand? Where the market does do the things. You understand? Same thing, guys, before the news happens, you should have understood what was going on. You see what is going on. So you could have understood what is going on. You want to see people getting trapped first. Guys, market did reject this one maybe many times, but you want to see many people getting trapped first, then you can get all those things, guys. You understand? So that's what I'm trying to emphasize. Hopefully, I'm gonna ask some questions, guys, or test the thing, then you can understand what's going on, gents. I'm gonna send some things for you guys, like you gonna just gonna return me and with some questions, then we can understand. But I just keep it simple like that so that I can be more consistent. Danko. Stop share and then continue.